Climate action is paying off. CDP reports companies can earn up to $21 for every $1 spent reducing climate risks, a clear proof that disclosure delivers value. To know more about this, we have CDP's Dennis Wan. So Dennis, what's happening? What's driving the strong financial returns in climate risk mitigation?
Well, the economist's answer to this is that investing in climate risk and opportunity is a highly imperfect market in terms of not everybody knows every piece of data transparently and at the same time. So the first thing to accept is that environmental risk is financial risk, perhaps nowhere more than in Asia Pacific. Where I am, in Hong Kong, we've had an average of 5 to 8 typhoons per year in the decades leading up to now. But this year, we've reached possibly 14 typhoons already. And I'm well aware that some of these typhoons passed through the Philippines, passed through Taiwan before they even hit Hong Kong. So over the past 3 decades, Asia Pacific has suffered $2 trillion in economic losses from environmental extreme weather. So the second thing to know is that there's a large amount of data already available, data on the environment that's available to corporates and investors. And going back to my point about an imperfect market, not everybody knows that, and not everybody is using it effectively. So that's what CDP is bringing to the attention of the world in reports like our disclosure dividend report. There's high return from investing in physical risk mitigation. In Asia, every $1 spent on addressing physical risk could yield up to $11 in return. There's high return also from investing in environmental action. Again, in APAC, the financial case is especially compelling. For every $4.5 million invested in that kind of opportunity, you could receive a return of up to 8.1 times, $36.5 million. That's the average that's reported to CDP. So the data is there, but not everyone's looking at it to recognize this wonderful return.
Can you identify which specific actions or maybe even strategies help companies turn disclosure into real value?
So the way to look at this question is to look at what leading companies do. When I say leading companies, then CDP gathers information from tens of thousands of companies on an annual basis, worth 2/3 of the listed market capitalization of the world. And when we've analyzed this in our reports, then we look at the top 10% of those companies and what they're doing to turn disclosure into meaningful action. And they are pulling 4 key business levers. Number one is they are developing 1.5-degree transition plans. They are engaging across their value chains. They are setting an internal carbon price, and they are linking executive pay to climate goals. In Asia, of the companies where boards have their environmental action linked to their pay, then 72% of those companies are actually achieving those goals. So companies with climate oversight at the board level, at least one climate equipped and knowledgeable board member are 5 times more likely to set scope 3 targets or decarbonization targets. So I've suggested several strategies and actions, as you asked for, that are important. But one of the most fundamental is to bring the planet into the boardroom, because when boards engage, action accelerates and value is realized.
Now, on transparent reporting this time, how can it help businesses stay competitive as climate and market pressures intensify ahead of COP30?
CDP explains the benefits of transparent environmental reporting as an ABC. A stands for access to capital. COP or COP's 30's focus is on implementation. And to attract capital, companies need comparable, decision useful data to action on. We have 640 financial institutions managing 127 trillion in assets who are already using CDP data to guide investment and lending decisions. For an example, in Japan, Sumitomo Mitsui Banking Corporation, or SMBC, has tied loan rates to CDP scores so that their clients get better financing with a better CDP score. B is for business utility. For instance, securing market access through their value chain. For Asian suppliers, then strong disclosure is a passport to ensuring that they make international buyers happy. At CDP, we have 270 of the biggest buyers in the world, managing 6.4 trillion in buying power. And they are asking all of their suppliers to disclose their environmental footprint. And those kind of suppliers who are transparent about their environmental footprint are getting more buyers. C finally stands for compliance and compliance readiness, because transparent reporting builds the readiness of companies to deal with mandatory reporting. Across Asia, 13 jurisdictions are about to adopt ISSB, mandatory disclosure requirements, and reporting to CDP gets those companies ready early for that mandatory reporting. So access to capital, business utility, and compliance readiness. These are three ways in which transparent reporting does help businesses stay competitive.
Thank you so much for sharing your insights, Dennis.
Thank you.
Once again, that was Dennis Wan, Market Director for Asia Pacific XCJ at CDP. For more news, visit esgbusiness.com.